Welcome back to XRP Insider, your trusted source for the latest crypto updates, market analysis, and breaking developments shaping the future of digital assets. Today's market is once again sitting on a knife's edge as Bitcoin, Ethereum, and XRP continue hovering near critical support levels, while investors across the globe closely monitor rising geopolitical tensions between the United States and Iran. The crypto market entered the day with uncertainty dominating investor sentiment, and traders are now trying to figure out whether this is simply another temporary pullback or the beginning of a deeper correction across the entire market. Bitcoin is struggling to maintain stability around the $76,000 range. Ethereum is fighting to reclaim momentum near $2,100, and XRP continues facing pressure as it trades below several major technical indicators. At the same time, institutions appear cautious. ETF outflows are growing for Bitcoin and Ethereum, and fear is once again spreading across financial markets as global tensions intensify. There is a lot happening right now, and today we are breaking down every major detail you need to know about the current crypto situation and what it could mean for XRP moving forward. The biggest concern impacting the market today is the rapidly developing geopolitical conflict involving the United States and Iran. Reports confirm that both sides exchanged fire despite the recently announced ceasefire agreement, creating a fresh wave of uncertainty across global financial markets. Investors had initially hoped the ceasefire would calm tensions and allow markets to stabilize, but recent military actions have once again placed traders in a defensive mindset. According to reports, the United States carried out what officials described as self-defense strikes targeting Iranian missile sites and vessels involved in mine-laying operations. In response, Iran's Islamic Revolutionary Guard Corps threatened retaliation, claiming the strikes violated the terms of the ceasefire agreement. The situation became even more concerning after reports emerged that Iranian forces downed a U.S. drone and reportedly targeted a fighter jet. Although there has not been an official announcement declaring the ceasefire completely over, investors remain extremely nervous because even small escalations between major nations can quickly trigger volatility across risk assets like cryptocurrencies. Right now, market participants appear to be waiting for clarity surrounding a possible memorandum of understanding between the United States and Iran. Discussions are reportedly continuing behind the scenes, particularly regarding Iran's nuclear program and the exact language included in the agreement. This uncertainty is creating hesitation across financial markets because traders hate situations where the outcome remains unclear. Investors are essentially stuck in a holding pattern, waiting to see whether diplomacy will prevail or whether tensions could spiral further out of control. Crypto traders in particular are becoming more cautious because global uncertainty tends to reduce appetite for high-risk assets. When investors feel uncertain about the broader economy or geopolitical stability, many choose to move money into safer investments instead of speculative assets like cryptocurrencies. That shift in behavior is clearly visible in today's market conditions, where trading volume has weakened and momentum across major cryptocurrencies remains under pressure, despite occasional recovery attempts throughout the day. One of the clearest indicators showing how fearful the market has become is the Crypto Fear and Greed Index. The latest reading shows sentiment remains deep in extreme fear territory, with the index falling to 25 after sitting around 34 just one day earlier. That sharp decline reflects growing anxiety among investors who are becoming increasingly uncomfortable with current market conditions. Extreme fear readings often appear during periods when traders worry about sudden crashes, prolonged corrections, or broader economic instability. Although some experienced investors view fear as a potential buying opportunity, the reality is that fear can also keep prices suppressed for extended periods when confidence disappears from the market. Right now, the combination of geopolitical tension, declining institutional demand, and ongoing technical weakness is creating an environment where buyers are hesitant to step in aggressively. Many investors are simply waiting for confirmation that market conditions are stabilizing before committing significant capital back into cryptocurrencies. Bitcoin remains the center of attention as it continues trading near the $76,000 level, while struggling to regain bullish momentum. Although Bitcoin has managed to hold above key support zones for now, the overall technical picture still leans bearish in the short term. One of the biggest concerns for traders is the fact that Bitcoin remains trapped below several important moving averages, including the 50-day, 100-day, and 200-day exponential moving averages. These indicators often act as major resistance levels during corrective phases, and the inability to reclaim them suggests that sellers still control the market direction. Every recovery attempt so far has faced strong resistance, preventing Bitcoin from building sustainable momentum. This has created a frustrating environment for bulls who are hoping the market would quickly recover after previous dips. Instead, Bitcoin continues moving sideways, while traders carefully monitor whether support levels can continue holding under increasing pressure. Institutional activity is also adding additional concern to the Bitcoin outlook. Spot Bitcoin ETFs experienced another wave of significant outflows, with roughly $334 million leaving these investment products in a single day. That level of selling reflects weakening institutional confidence in the short term and signals that many large investors are reducing exposure to crypto risk while uncertainty remains elevated. ETF outflows matter because institutional demand has been one of the primary drivers supporting Bitcoin's price over the past year. When money begins flowing out instead of flowing in, it can create sustained downward pressure on the market. Total cumulative inflows into Bitcoin ETFs have now declined noticeably, while assets under management continue moderating. If this trend continues over the coming days or weeks, Bitcoin could face even greater difficulty maintaining current price levels. Investors are closely watching whether institutions return to buying or continue stepping away from the market until global conditions improve. From a technical perspective, Bitcoin's momentum indicators continue signaling weakness. The relative strength index on the daily chart remains stuck in the low 40s, suggesting bearish momentum still dominates, despite the absence of fully oversold conditions. Meanwhile, the MACD histogram remains negative, reinforcing the idea that downside pressure has not disappeared. These indicators matter because they help traders understand the underlying strength behind price movements. Right now, the technical signals suggest that Bitcoin lacks the momentum necessary for a strong breakout higher. Immediate resistance sits near the cluster formed by the 50-day and 100-day exponential moving averages. Unless Bitcoin can break above those levels convincingly, traders expect rallies to face continued selling pressure. On the downside, analysts are watching support around the $70,000 region very carefully because losing that level could trigger a deeper corrective phase and potentially accelerate bearish momentum across the entire crypto market. Ethereum is facing a very similar situation as it struggles near the important $2,100 area. The second largest cryptocurrency continues trading below major moving averages, and technical indicators suggest recovery attempts remain fragile for now. Ethereum bulls were hoping that improving market conditions earlier this year would push prices significantly higher, but recent weakness across the broader market has limited upside momentum. Institutional demand has also cooled considerably, which is creating additional pressure on Ethereum's price action. Spot Ethereum ETFs experienced roughly $35 million in outflows recently, further highlighting cautious investor sentiment. While Ethereum still maintains a strong long-term narrative surrounding decentralized finance, staking, and blockchain adoption, short-term traders remain concerned about the lack of buying strength visible in current market conditions. As long as Ethereum remains below key resistance levels, many analysts believe the market could continue experiencing slow, unstable price movement. The technical outlook for Ethereum remains challenging because price action continues trading beneath the 50-day, 100-day, and 200-day exponential moving averages. This setup typically signals that bearish momentum remains dominant until proven otherwise. The relative strength index currently sits near 38, reflecting continued weakness without yet reaching extremely oversold territory. Meanwhile, the MACD histogram remains negative, reinforcing bearish sentiment despite occasional recovery attempts throughout the week. Traders are now closely watching whether Ethereum can hold support near current levels, or whether additional downside could emerge if broader market fear intensifies further. The lack of strong institutional inflows combined with weak technical momentum makes it difficult for Ethereum to build sustained bullish pressure right now. While long-term believers remain optimistic about Ethereum's future potential, short-term market conditions continue creating significant uncertainty for traders trying to predict the next major move. Now let's talk about XRP, which remains one of the most closely watched cryptocurrencies in the market today. XRP continues trading significantly below several key moving averages, reflecting the same cautious market environment affecting Bitcoin and Ethereum. However, there is one important difference that has captured investor attention. Unlike Bitcoin and Ethereum, XRP spot ETFs have actually maintained a steady streak of positive inflows over the past 2 weeks. Recent reports show XRP ETFs recorded approximately $1.55 million in inflows during the latest trading session. While that number may appear small compared to Bitcoin ETF activity, it still represents a positive sign because it shows that at least some institutional investors continue showing interest in XRP despite broader market weakness. Total cumulative inflows into XRP ETFs have reportedly reached over $1 billion, signaling that institutional confidence in XRP has not completely disappeared, even during periods of market uncertainty. Despite those ETF inflows, XRP's price action still remains under pressure because broader market sentiment continues dominating trader behavior. Investors are currently prioritizing safety and caution over aggressive buying, which means even positive developments surrounding XRP are struggling to generate major upward momentum. Traders also remain focused on technical resistance levels that continue limiting recovery attempts. XRP bulls want to see the token reclaim important moving averages and build stronger support zones before confidence can fully return. Right now, the challenge for XRP is not necessarily a lack of interest, but rather the overall weakness affecting the crypto market as a whole. As long as Bitcoin and Ethereum remain unstable, altcoins like XRP often struggle to generate independent momentum. That correlation continues playing a major role in XRP's short-term outlook, even though the project itself continues attracting institutional attention through ETF activity and broader adoption discussions. Another important factor influencing XRP sentiment is the growing belief that the asset could benefit significantly once market conditions stabilize. Many investors continue viewing XRP as one of the most undervalued large-cap cryptocurrencies because of its focus on cross-border payments and financial infrastructure. Supporters argue that XRP's utility within the global payments ecosystem gives it long-term advantages compared to many speculative crypto projects lacking real-world use cases. Even during periods of market weakness, XRP continues maintaining a loyal investor base that believes adoption could eventually drive significant price appreciation. However, traders also understand that utility alone is not enough to guarantee immediate gains. Market sentiment, liquidity conditions, institutional participation, and geopolitical stability all play major roles in determining short-term price direction. That is why many XRP holders remain patient right now, waiting for stronger confirmation that the broader crypto market is ready to recover before expecting major bullish movement. The relationship between geopolitical events and crypto markets has become increasingly important over the past few years. Cryptocurrencies were once viewed as largely disconnected from traditional financial systems, but today they react strongly to global economic and political developments. Whenever uncertainty increases worldwide, investors often reduce exposure to volatile assets, including cryptocurrencies. That pattern is clearly visible in today's market environment, where fears surrounding military conflict and diplomatic instability are weighing heavily on investor confidence. Bitcoin, Ethereum, and XRP are all feeling the effects of this uncertainty as traders avoid taking aggressive positions until the situation becomes clearer. If tensions between the United States and Iran escalate further, markets could experience even more volatility in the days ahead. On the other hand, if diplomatic progress emerges and the ceasefire holds, cryptocurrencies could potentially rebound as investor confidence begins recovering. One interesting aspect of the current market situation is how differently institutional investors are treating various cryptocurrencies. Bitcoin and Ethereum are experiencing significant ETF outflows, while XRP continues attracting mild but steady inflows. That divergence suggests some investors may be viewing XRP differently from the rest of the market. It could reflect growing confidence in XRP's long-term regulatory position or optimism surrounding its future adoption within the financial sector. However, it is also important to recognize that the inflows remain relatively small compared to the scale of outflows impacting Bitcoin and Ethereum. In other words, XRP is showing resilience, but it has not yet demonstrated enough strength to completely separate itself from broader market conditions. Investors will be watching closely to see whether XRP ETF inflows continue strengthening or whether they eventually slow down if market fear remains elevated for an extended period. For traders navigating today's market, patience and risk management are becoming increasingly important. volatility remains elevated, headlines continue changing rapidly, and technical indicators across major cryptocurrencies still lean bearish in the short term. That combination creates a difficult environment for both short-term traders and long-term investors. Some traders are choosing to remain defensive until stronger bullish confirmation appears, while others are gradually accumulating positions during periods of fear in anticipation of future recovery. Both approaches carry risks, especially in a market heavily influenced by geopolitical developments that can shift unexpectedly at any moment. The key for investors right now is staying informed, monitoring critical support and resistance levels, and avoiding emotional decision-making during periods of uncertainty. Crypto markets move quickly, and reactions driven by panic often lead to costly mistakes when volatility spikes unexpectedly. As we move deeper into the week, several factors will likely determine the next major direction for Bitcoin, Ethereum, and XRP. Investors will continue monitoring developments surrounding the United States and Iran, paying close attention to whether diplomatic discussions progress or whether additional military actions occur. ETF flow data will also remain extremely important because institutional participation continues, serving as one of the biggest drivers behind market momentum. If Bitcoin and Ethereum outflows begin slowing, while XRP inflows remain steady, sentiment could gradually improve. On the technical side, traders are watching whether major support levels continue holding, or whether additional selling pressure forces prices lower. The next few trading sessions could become extremely important in shaping short-term market expectations, especially as investors search for clearer signs regarding the overall direction of the crypto market. At the end of the day, today's crypto market reflects a battle between uncertainty and long-term optimism. Fear currently dominates short-term sentiment, driven by geopolitical risks, ETF outflows, and weak technical momentum across major assets. However, many investors still believe the long-term future of cryptocurrencies remains strong, particularly for projects like XRP that continue building institutional interest and real-world utility. The market may feel unstable right now, but crypto has survived countless periods of fear and volatility before. Traders and investors are once again being tested as they navigate another challenging chapter in the ever-changing world of digital assets. Whether Bitcoin can defend key support, whether Ethereum can reclaim momentum, and whether XRP can finally break out of its current weakness, are questions that could define the next phase of the market. Until then, all eyes remain on the headlines, the charts, and the growing uncertainty shaping the future of crypto.